All right, let's talk about gold, because what we've just seen is absolutely wild. A massive historic crash followed by a recovery that's just been relentless. So today we're going to do a step-by-step technical breakdown to figure out what on earth is going on, and more importantly, where we might be headed next.
So to really get what's happening now, you've got to rewind just a little bit. I mean, look at this. Back in January, gold went on this incredible run, peaking at nearly $5,600. It was just completely parabolic.
But you know how these things go. That peak didn't last long. What came next was a flash crash, and I mean a brutal one. Prices just fell off a cliff, tumbling all the way down to around $4,800. Just a huge drop in almost no time at all.
And that right there, that's the setup for what we're digging into today. You have this historic crash, and then boom, this incredibly powerful V-shaped recovery. So you have to ask, right? What is driving this? And is this thing for real? Is it actually sustainable?
Okay, so here's our game plan. We'll start with the V-shape itself, then zoom out for the view from above. After that, we'll get right under the microscope, look at what's fueling the fire, and finish up with the decisive levels you need to be watching.
All right, let's get into it. Part 1, gold's dramatic V-shape. What's the story so far? So this is really the heart of the matter. The price didn't just kind of bounce, it aggressively shot right back up. And the big deal here is that it reclaimed the $5,000 level. Now, for anyone who watches markets, you know that big round numbers like 5,000 are massive psychological levels. It's a line in the sand. For the price to get back above it and to do it that fast, well, that's a huge show of force from the buyers.
Okay, so that's the immediate action. Now, let's pull back. Time for the view from above, looking at those long-term trends.
And, you know, what's interesting is when you zoom out, despite that absolutely terrifying crash, the bigger picture still looks really bullish. I mean, the price is holding well above those key long-term moving averages, the 50 and the 200. That $5,000 mark we just talked about, it's now acting as a solid floor of support. And those Bollinger Bands, well, they're blown out wide, which just confirms what we can all feel. Volatility is through the roof right now.
All right, time to zoom all the way in. Let's get the microscope out and look at the short-term momentum. This is where we see the play-by-play.
Okay, so one of the first things that really jumps off the short-term chart is this classic bullish pattern called a golden cross. It sounds kind of fancy, but it's pretty simple, really. All it means is that a faster, shorter-term average, like the 9 EMA, has crossed up and over a slower one. Think of it like a little signal flare telling you that the upward momentum is picking up speed.
And I love this because it shows the structure of the recovery. See, it's not just a wild, straight shot to the moon. It's building a proper stair-stepping pattern. You get a new high, then a little pullback. But, and this is key, it finds a low that's higher than the last one. Then it breaks out and makes a new, higher high. And it just repeats. This is exactly what you want to see for a healthy, sustainable uptrend. It's textbook.
All right, another really important tool in the kit is the RSI, the Relative Strength Index. Before we look at the number, just think of it like a tachometer on a car engine. It tells you how fast the engine is revving. It's a momentum gauge that helps us spot when a price move might be getting a little overheated, maybe running too far too fast. And here's where we are. The RSI is reading right around 70. Now, in the world of technical analysis, that's the red line. It's considered the overbought threshold. Now, this is super important. This does not mean sell everything the top is in. Not at all. It's more like a little warning light on the dashboard. It's just telling us, hey, this engine has been running hot for a while. It suggests the rally might be a bit stretched and could be due for a pause or a little cool down.
So the charts look strong, right? But what's the why? What's actually fueling the fire behind this massive rally?
And it really looks like a perfect storm of factors. For starters, you've got geopolitical risk creeping back in. Talk about tariffs, the whole Greenland situation. All this stuff makes investors nervous. And when they're nervous, they run to a classic safe haven like gold. Then you've got uncertainty over at the Federal Reserve. Nobody's quite sure what they'll do next, and the market hates uncertainty. And finally, you might have a good old-fashioned short squeeze happening. Basically, anyone who bet against gold is now in a panic, being forced to buy back their positions to cut their losses. And that buying just adds even more fuel to the rally.
Okay, let's bring it all home. We've got the technicals, we've got the fundamentals. So, where do we go from here? Let's talk about the decisive levels everyone is watching.
So it really boils down to this. The market is at a fork in the road, and it's all about these key levels.
The bullish case is pretty clear. They need to break through and hold above 5120. If they can do that, the next logical target is up around 5300. On the flip side, for the bears, their big hope is a failure at that $5,000 support level. If that floor gives way, well, a trip back down to retest those recent lows around 4840 is definitely on the table.
Okay, so to wrap this all up in a neat little bow, let's look at the final indicator dashboard.
This is a really nice snapshot of everything we've talked about. Price itself, bullish. It's reclaimed 5,000 and is knocking on the door of 5120. The moving averages, bullish, with that 9 EMA acting as great dynamic support. Momentum indicators like MACD and OBV, which measures buying pressure, they're both looking healthy and bullish. The one little yellow flag, as we said, is that RSI. It's sitting right at that overbought level, just hinting that the market might need to take a breather.
And so that's where we're left. We've got all these indicators flashing bullish, but at the same time, volatility is just extreme. So that's the big question we're all wrestling with. Is this a real, sustainable recovery, or is this just the quiet before the next storm?